Hey, what's up, everybody? It's Stephen A. Williams, president and founder of the creditrepairshop.com. And in today's video, we're going to talk about a lawsuit. Individual is being sued by an auto finance company. And just in case you find yourself in this situation, I want to be able to give you some information on how you can help yourself if if you're being sued. If you had a vehicle that was repossessed and you're just not able to pay on it, and they're taking you to court, they're going to try to garnish your wages, and that's going to make you under a lot of financial stress. So the first thing is you should always contact hardship departments when you're dealing with direct the original creditor, because they may have some sort of relief, or they may choose to do a 1099-C when they find out your situation. Because right now, if someone's trying to come after you for the money and you haven't been responding, they're just probably thinking that you're just running from them. So I want to make you aware of something that you may not know. Some of you may know it. And I'm also going to talk about some misinformation that, and I don't want to say it's misinformation, but there's an easy way for you to be able to check if your contract is legal or not legal based off of what some of the other YouTube channels are throwing out there. So first, let's talk about the things that we would do. Is first I want to talk about this little piece of law that's in my state, and it's in other states, when it deals with finance charges. When I get these types of court summons lawsuits, I always check a few things in the Truth in Lending. And on those other videos, they talk about this too, but they don't talk about it in the way that I talk about it. That's why you need to pay close attention. I'm going to break this down for you in detail. A lot of you been asking, Steve, could you just break it down more? Well, I break it down, but what I want you to do is I want you to listen. I want you to put down other stuff. Don't check your email. Don't do nothing. This is very important information to you, and it may not pertain to you right now because you didn't have a repossession, but it could pertain to you with something that you're dealing with an original creditor or a debt collector. I'm going to tell you, I'm going to walk you through it. This is like a template on how you deal with this type of stuff, because when you're solving problems, you look at everything and it's like a puzzle on the floor, and you start picking the pieces and putting them together so you can see the whole picture. And that picture right now, if they send you a court summons, it's not looking good for you. And then what you have to do is you have to look at the holes in that picture, in that puzzle, and say, okay, they provided this, let me look at that. They provided this, let me look at that. And you might be thinking that, well, if they send me the contract and I review the contract and this is what I signed, everything has to be right. And I'm here to tell you that it may not be right. It may not be 100% legal. And based off of what we see with some of the other contracts from these, especially with these car dealers, is that there's a whole nother contract that was turned in to the finance company who paid them. So this is what this whole thing is about here. But first, let's talk about the law with finance charges. Now, right here, this is what I want you to look at. This is Wisconsin, but I'm pretty sure it's in your state too, something similar. It says here on section 8, the portion of the finance charge consisting of the amount equal to a discount of 5% or less of the stated price, which is offered to induce payment in full within a stated period of time in connection with the sale of particular goods and services for which credit is not otherwise available from the merchant, shall not be in the finance charge for the purposes of determining the maximum rate of the finance charge under sub 2 or 3 with respect to customers who do not pay in full. So basically, let me break this down for you. And this thing here, this law here has actually allowed us to beat payday lenders, personal loan lenders, and these types of lenders. I'm talking about original creditors where they understood that they were incorrectly charged a finance charge for stuff that should not have been included in a finance charge. So now, let's break this down. Let me get my, what was that? You hear that noise? I don't know what that was. Oh, that's like a little, what is that? Does that allow me to write on here? It allowed, I just learned something on here. So check that out. It allows me to write. I didn't even know that. So we're looking at this portion here. Right here, this section. Man, I love that. Sometimes you learn something about some stuff that you're utilizing. You know, I love this board, and I didn't even know that I could use it that way. So now I know what that means there. So now let's get to breaking this down here. I'm having my fun with this. Having my fun. And also, Happy New Year to everybody if you're watching this video at the time that New Year's is coming. Let's get over here. Let's get to this. Come on. All right. So now, get to our screen here. Let's see where we're at. So now I don't know what I'm doing. Don't worry, I'll cut this part out of the video. There we go. All right, so we got that. So now let's break it down. Let's break it down. So we just broke down with the finance charges what can't. Well, we don't have exactly what would not be able to qualify, but we know that anything that is not supplied by. So that's very important. Those words. Anything that is not supplied by the original creditor. Anything that's not supplied by the original creditor. And this is where a lot of the other YouTube channels where they're talking about contract law and they state that they have that little question in there about insurance. So what I want you to do is if you could go find your auto loan, if you have an auto loan and look at the contract, there's a little section and videos have been blowing up about this where they talk about insurance. And insurance is one of the things that cannot be thrown in there. But you will notice that they have on there where they tell people not, it has like right here, not applicable, because they're opting out of that. And this would be something that could be supplied by the original creditor, by the original creditor. But let me tell you the problem with it, and this is why a lot of people are making videos on it. If they use an outside party, they've just violated what I just showed you with that section on there, especially in my state, because this is not something that they would supply. So they actually have a contract where if someone was to just say, hey, in the finance charges, was that included? And did you provide that, or was this provided by someone else? And if they say that it was provided by someone else, see, they don't expect you to know that. So if they say it was provided by someone else, well, this whole contract is fraud. The whole contract would be fraud. So now let's break down what we would do in this particular situation is for someone who has had their vehicle repossessed, and we're going to just walk through what I would tell someone to do if they're looking at what's going on in court. The first thing is we want to get that original contract, and something that we want to also ask them is that we want them to provide us the original contract that they have so we can look at it against the one that we have. So you have yours, and then we want them to supply theirs. The reason why we want that to happen is because in court cases, you want to take my word for it, in court cases with a lot of these subprime auto lending services, the contract was different that was actually turned into them than the one that people were signing when they purchased the car. And I'm going to get into why that can happen. I'm going to get into why that can happen. So now, so we have the, so we want to look at that original contract. We want to look and see if there's any type of credit insurance. Now, credit insurance, what that could be is that could be where if you default on the loan, that the car is paid off. So, but if we think about it, if they have credit insurance, which is something that is stated on here that this individual doesn't have credit insurance, they opted out here, but does the dealer have some sort of insurance that they put on there? And did they charge you for that insurance and you just didn't even know what that was about? That you can't find that out until you look at theirs. When you look at their contract, you may see on a line there that it has some sort of backup for them if you don't pay on your car. It could either pay a certain amount of months, it could either pay the car off. You never know. There's always these weird types of insurances that are out there. All they're trying to do is an arbitrage where they want a lower amount of people that get repoed over the amount of people that do get repoed. There's insurances that are out there for dealers on that. And the reasons why dealers have that insurance, let me tell you the reason why. It's because the finance companies do what's called a chargeback. Now, you've probably heard of a chargeback on your credit card. You didn't even know that there's chargebacks on dealers. Like a lot of dealers, especially the smaller dealers that are working with these subprime companies, if they have a certain amount of vehicles either come back repoed, they charge back a percentage, or if they have for per vehicle, it just depends on the size of the dealership and the contract that they have negotiated. I made a video not too long ago with credit acceptance where dealers didn't even get a payment until they sold 100 vehicles. And if any of those payments did not get paid in those 100 vehicles that they have already just put the money out on, they didn't even get their money. It was like they have 100 vehicles out there and they're not even getting paid the money on them, the payments on them. And they want to do this because they feel that it's a good deal for them to be able to sell cars and to get cars financed. And they basically make some of the down payment money, but they still have a lot of money on the street. So you can see why dealers will want to have credit insurance, why they want to have anything that can back them up just in case the consumer doesn't pay. They want to have that stuff. But the thing about it is that it also puts these dealers in a weird situation. I don't want to say weird, but just in a bad situation because it can make them want to do things that they shouldn't do. And that's how we get into having two different contracts, which is on record for where the car salesman and the finance company, or the finance department needs to make your application fit the profiles that are approved with the finance companies that they're working with. And a lot of them usually only work with one or two of these subprime type finance companies, and don't even think that a person with good credit hadn't been thrown into that pot, because they pay the dealer a good percentage of money for even bringing them the loan. So even people that have good credit have been stuck into these crazy loans. And so you have to be very careful. Another thing that you want to do once you start breaking down, you're going to start breaking down the finance charges. So if you're being sued, what you want to do is like you're going to start doing your research. So you've done this part to get the original contract, and you're going to be asking for this. And if they say, well, why do you want to review it? Don't you have one? You tell them, I need to review what you have because I believe that there's some issues on there. And when I review it, I'll be able to, come to court and tell you, or I'll, when in my response, I'll tell you. So as we're building everything up, we're going to start looking at who is the underwriter who is the underwriter for the loans of those companies. You will see that it's usually national banks. They don't want to have their name really up in there, but they're the ones that's giving the money to these offshoot subprime lenders, or they even make a company to be a subprime lender. And we just did a video on Wells Fargo where they have a $3.7 billion lawsuit settlement that they settled on for repossessing vehicles where people had actually made payments on them. And then there were some other issues that they had with them. But so you want to look at who is the underwriter so you can utilize some of the issues that you might see in their court case. And if they're having problems with the underwriter is basically given the rules that the subprime lender is going to use for their loans. Like, they're the ones that's saying you need to have it this way and we will approve it. That's what they do. And so you could look at if there's issues with the underwriter who gives the subprime lender their money, and you look at the specific issues that they have. Like, let me give you an example. With Santander, one of the things that people didn't even know is that they had an internal scoring system. So when people were signing the papers for a loan application, they thought that was going to the bureaus to get approved for their loan. But what it was going to Santander, and Santander had their own scoring process. And so what the dealers started doing is they were like, okay, we need to make these applications look this way, and we know that we're going to get the money from Santander. That is not my opinion. That is exactly what was in the Santander multi-state settlement lawsuit. So we utilize that information to help people be able to get settlements on a vehicle that they weren't even included in the lawsuit, where they were able to get their vehicle paid off. They paid a settlement on it, and some people did get their vehicles paid off because they were able to show in the contract that there was a whole bunch of issues that the dealer put in that contract and then made it look like a certain way with Santander. And they did have different contracts with some. So now we got the underwriter issue, and then we're going to start breaking down the truth in lending paperwork. And on the truth in lending paperwork, one of the things which I talked about a little bit on here was that it had a part about credit insurance. You can void out the whole entire contract based on fraud if they connected credit insurance to your finance charge. That's the basic thing that you're going to want to be looking at, and other things that were included in the finance charge. So what you want to do is you want to request that they give you everything that's in the finance charges. Because what they did, this is the sneaky thing that the lenders did. They make this statement and it says Federal Truth in Lending Disclosures. So you have your APR, your annual percentage rate, you have your finance charge, you have amount financed, you have the total payments, and then you have the total sale price. So they're like giving you these numbers. Okay, yeah, those look right. They add up. And then some of them, especially with Santander, is that they didn't add up. Like, people were doing the payments. They were like, wait, I paid this amount per month for 36 months or 48 months or 60 months, but the car wouldn't be paid off. So you already know that there's a problem with what they're saying your percentage rate is. And these are issues that can happen, but you don't even know them until you add up the numbers. All they expect us to do is just look at it and say, okay, yeah, that's what I said I'm gonna pay for the car. That's the down payment that I put. Yeah, everything looks right. You always wonder, why do they give us these contracts? And it's like all these different ways that they add up the number to get to what you're supposed to be paying on the car. The reason why they do that is because they want to make it confusing. That's my opinion. They want to make it confusing. So we want to look at the annual percentage rate. Does that match what you have on your documents that you have? You want to look at the finance charge. You want to look at the amount financed. You want to look at the total payments. You want to look at the total sale price. And then you want a full breakdown. You want a full breakdown of everything that they included in the finance charge. Because, see, this is where you're going to catch them. Because if they say, okay, well, this wasn't included in the finance charge, then you're going to say, well, these numbers here don't match up. And then you say, well, they're going to say, well, maybe we figured something wrong, and they're going to try to come up with some formula to make it work. You know, these are some numbers people. They'll sit down and say, well, this is where that number was, and this is where that number was. But basically, they won't be able to do that, because if you have your original contract, you will be able to say, well, this is what I see here, and then when what was turned into them is what they see. Let me tell you the reason why they will make some differences on that finance charge from what I've seen out there. Is that with number one, with the finance charge, it's going to allow them to make more money when they're getting the payments, because what they're doing is they're adding up and they're throwing in things that shouldn't have been thrown in there, and so they're able to put that into the financing of the loan, and then they're making money on that. Making extra money on that. Either they got paid up front from the lender, or they're going to be getting some type of residual, which is what was happening with credit acceptance. They were going to be getting some sort of residual income. So either which way, it makes the dealer get into this situation where if they're an honest dealer, they're going to be like, we're just not going to do that. But if they're a dishonest dealer, where they're like, hey, we got to make this money because the internet is messing up the pricing that we used to be able to make on the cars. We got to make that up somewhere, or we're not going to be able to make it with our dealership. These are the types of things that they start doing. So you're going to want a complete breakdown. Like, you're going to have to do some homework on this. I mean, some people say, well, is there a template, Steve, or this, that? I'm giving you the template. I'm telling you what to do. Is that number one, you want to get both contracts. Also, before that, you want to study what your laws are with finance charges, what can be included, what cannot. Some states like break it down fully what can be in there. Some states are kind of vague, like what we have in our state here in Wisconsin. So you want to first read that. Just type in on Google for your state's finance charges. You will see with your state legislation where you will see what can be included. They might be vague, and they may say, well, nothing that the company provides, if they don't provide it, it can't be included. That will really help you out, because all you have to state in your response to the court is that it states that certain things that's not provided by the dealer or whoever sold your product or service or whoever gave you your loan. If it was not supplied by them, it can't be put in the finance charge. And I just want to make sure that, give me a breakdown. I have a right to get a breakdown on that, because I want to see what was included in the finance charge before I move forward on what we're going to do about this account. Isn't that logical? Can't you see a judge saying, okay, turn it over to the plaintiff attorney and say, yeah, that sounds reasonable. Can you please get that information over to the defendant? So we got that. We're going to find out what the laws are in your state. Then we're going to get a request to get the original contract. What they did here is they sent the contract with this court summons. Reason why they sent it is because this was another company was sending it for another one. This could be a huge mistake on their part by sending it this way. They probably sent it. They were thinking, if we send it, it's going to make the person know that, hey, there's no way out of this game. This is the original contract, everything. What they probably didn't think about is that we just gave them the ammunition to potentially beat us, because looking at this, like, the attorney just took the documents and passed them over, wrote the court summons, didn't add up any numbers, didn't look at if any of this contract was legal or not. They're just looking at trying to garnish this person, win a judgment and garnish this person's wages. So you review the contracts, look for credit insurance. Again, credit insurance could pay off the vehicle. It could pay certain amounts of payments. You never know. You want to find out if it's on there. Usually it'll have some sort on the contract. It'll have some sort of box or line in your contract. This one here has NA. It was not given to the individual, but even if it was given to them, It would void out the contract if the finance company themselves were not the one that was performing based on what the laws are in the state of Wisconsin. Next thing is you want to see who is the underwriter for that particular lender. It is very rare that anyone other than some huge national bank is the actual underwriter for those loans. And even if it's not, you still want to find out who's the underwriter for the loan, for those loans, because you want to see if there's any issues, any lawsuits that are out there, because they're the ones that make the rules for the contracts that are turned in to get financing. And if there were issues with other people that, like what I mentioned with Santander, you want to utilize that information to base that in your response with dealing with what you're going through. Because trust me, some of these things that you wouldn't even think that a dealer would be dishonest, you would not think that a lender would be dishonest. We just saw Wells Fargo with a $3.7 billion settlement with the federal government over violations. Now, they didn't admit any wrongdoing, but who pays $3.7 billion if you didn't do anything wrong? Next thing is you want to request a breakdown of the finance charges. Everything that was included in the finance charge. They try to get away with it by just putting on here finance charges in an amount. You want to know, I want a breakdown of what this amount, what was this amount for? What was that amount for? And don't let them just say it was the finance charge. And if they do try to say it was a finance charge, then you break down the problems with everything else. Like with this one here, one of the things that I saw that was a huge problem was that on a vehicle that is, I'm talking about a lower end vehicle, that they actually put 75 months. 75 months for the payment, 75 months on a payment. 60 months is 5 years. 72 months is 6 years. 75 months on a vehicle that, according to them, was only $16,800. $16,800. $16,800. 75 months. So you already see a pattern. You're going to make somebody pay on a vehicle for 75 months on a $16,000 vehicle. You do those numbers and you let me know if that seems like that there's a problem with this loan. So this we're going to be helping this individual, and I mean, you know, every situation is different. I wish that I could tell you that all situations were the same, but I could just tell you that every situation is different, and you just have to be willing to at least to have some sort of chance. You have to be willing to at least try to fight and see what can happen. Some of the best things that could happen is that you can end up getting a generous settlement. That would be one of the outcomes. Another thing is that the judge could see it your way and say that this contract is null and void because of this issue with the finance charges. Judges have been willing to do that because it is not up to you to know if a contract is constructed right. You got to know about the numbers and stuff like that. But is this contract, does it violate? Because they don't disclose on that document if certain things were disclosed to you. They make you write and they make you state that you read the entire contract, but we know you could look at these, look at that, all of that wording. They don't put all that stuff in there for no reason. And they have something right here with the finance charges, finance charge and payments. How we will figure finance charges. We will figure finance charges on a daily basis at an annual percentage rate of the unpaid part of the amount financed. So see, that's where you can see where there would be a problem, where if they have stuff that is in there that should not be part of what you're paying on because of the law, then they're breaking the law by charging you with that finance charge, because that's where you end up paying more for something that you wasn't supposed to be even paying for. It shouldn't have been included in there. You should have had a way that you could have opted out of even having that, either some type of contract or some type of insurance or some type of coverage, or you never know what it is. I just want you to dig into what you got. If you're experiencing these types of problems, I just want you to dig into your contracts and look at them and just say, okay, this is a problem. This could be a problem. And then if you're being sued, or even if you're not being sued and they're just having a debt collector come after you, just imagine if a debt collector that purchased a debt and you came back at them with that, they're going to be like, we're going to give this back to whoever it was, because we don't even want to get involved in that. We can't even argue with that part there. All right, so I'm going to end the video here. Please like this video. Please subscribe to the channel. Post your questions and comments. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, what makes us different, so you can see my 8-point validation process, my 2-phase settlement process. And also, if you need your credit reports and scores, go to the website your3scores.com. Links are below this video, where you get your TransUnion, Equifax, and Experian credit reports. If you have debt collectors coming after you, grab my 3-pack of letters. Please make a donation. Don't just grab them and not be I don't know. Just don't just grab them and don't make a donation. Those are very good letters that could stop debt collectors early in the game, and utilize them. It has statute of limitations, debt validation, and cease and desist collection activities letter. Thank you for your time. This is Stephen A. Williams, president and founder of thecreditrepairshop.com.